Well, Jerome Powell just canceled stagflation, canceled the recession, and canceled really any potential of rate hikes. That was the biggest fear that we had, that after a quarter of hotter than expected inflation data, of hotter ECI data, hotter ADP payrolls numbers, we actually got J. Powell going, nah, moon, baby. How'd he do that? How'd he do? He basically unwound some of the most hawkish expectations we could have had for the Fed. He unwound the fear that we would actually have higher rates. Instead, his paths forward are either we stay or we lower. And he gave us a few paths. He actually gave us paths. He said there are three paths. More persistent inflation, hold off on rate cuts. Greater confidence in inflation, cut. Unexpected weakening in the labor market, cut. But what about these wage gains? I mean, wage gains, that could set off a wage price spiral, right? I mean, if we have wage gains that all of a sudden are too excessive, well, we're going to be back in a wage price spiral, right? That would be bad. Jerome Powell's take, we're not worried about it. We want people to make more money. In fact, last year, we saw wage gains that were elevated and inflation collapsed. And we expect the same thing will happen this year. Wow, this is way more dovish than expected. Now, the first sign that we were going to get a dovish Jerome Powell today was that we were expecting to go from $60 billion of Treasury runoffs down to 30. Instead, we got it go all the way down to 25. That extra $5 billion was your heads up from J. Powell that this was going to be a dovish meeting. At the beginning of the meeting, I said, okay, I'm now flipping 60 dovish, 40% hawkish solely because of that flip. And then throughout the meeting, we got more and more dovishness. In fact, he even addressed our inflation expectations concern. Quite frankly, J. Powell, if you're not a course member yet, we'll extend the coupon for another few hours for you. We got McKay and email. We'll let you come in because clearly you're reading off our bingo card, okay? You did a great job. You addressed basically everything we've been bitching about on the channel. It was really impressive. I mean, quite frankly, there was a point, it was almost as if he was reading our bingo card. He addressed both of the second half of inflation should be lower on our bingo card, and in the same box, we're talking about the lag effect of real estate coming eventually and explaining why there's this lag and split effect in real estate. He almost read it off verbatim. So thank you, J. Powell, for being a supporter and a subscriber. We love you. Okay, but let's, in seriousness, J. Powell addressed three really important things. Number one, inflation expectations. He finally addressed, look, inflation expectations moved up at the beginning of the year. The 5-year break-even level moved up from January all the way through about last week. We went straight up on inflation expectations. And what did we end up getting? We got Jerome Powell saying, in recent data, inflation expectation data sets have come up in the short term, but the long term remains well anchored. So he washed the short term concern. Then what about the fact that GDP came in at 1.6% in Q1? Well, as we expected he would on our bingo card, in fact, we wrote that down as well. We wrote down on our bingo card that he would split out I'll show you the bingo card here, that he would split out GDP, that some parts like exports and inventories were weak, but GDP was overall strong. Almost read that off verbatim. How? Because he told us while GDP growth moderated to 1.6% in Q1, private domestic final purchases, complicated phrase there, excludes exports and inventory buildup, and that level came in at 3.1%, which to them sends a clear signal that the economy is still actually very strong. So, washed the inflation expectation concern, washed the rate hike concern, washed the wage price spiral concern, washed the stagflation GDP concern, washed, if I didn't say yet, the rate hike concern. And then, of course, we have the real estate concern, like, oh, but owner's equivalent rent is still high. Yeah, it's taking longer to come down. That makes sense. Market rents, he says, are flat. We've seen that in housing as well. Market rents are either flat to slightly down in most markets across the country. The difference is people who are already in can't really realize a lower rent until they move. When you move, you get market rent. When you stay in, you might be locked in higher until you actually move. because sometimes there's a low chance your landlord's actually going to lower the rent, right? So this entire meeting was Jerome Powell washing fears about the economy. He says, look, it's going to take longer than previously expected to lower rates, remains committed to 2%. The labor market's been softening somewhat, but nothing that's extremely concerning at this point. It feels like a normalization. In fact, when looking at surveys, so leading indicators of employment, he thinks we're back at pre-pandemic levels, not substantially weaker. He says, obviously committed to the current stance. Clearly, didn't want to delve into when rate cuts will begin or how many we would get. Not a surprise. But again, the washing of these bearish factors in the economy was extremely dovish. Now, some people are saying, oh, it's dovish, that maybe he realizes something's wrong, that something's coming. But quite frankly, he tried addressing that too, that he doesn't actually see large damage in the labor market right now, because if he did, we would be cutting rates right now, even in the face of inflation, around 3%. They'd be cutting to preserve the labor market. When it comes to stagflation, he says, I was around for stagflation. Stagflation then was 10% unemployment, slow growth, high single-digit inflation. And he says, I just don't see where that is coming from today. He says, I don't see the stag or the flation. Now, I was tweeting during this as well and updating ehack.com, so you could always follow me at RealMeatKevin or check out the ehack.com page. Remember, today is the expiration for investing in househack, so if you're an accredited investor and you'd want to sign your subscription agreement, just make sure you do that today. We can get your accredited investor letter after. You can wire your funds in after. Please don't ACH. Make sure you wire. And read the information over at househack.com. That'll serve as a prospectus, right? And a solicitation. So let's keep going. We've got market implied interest rate cuts right now. Let's understand some of the movement and what we're getting in the market. We started this meeting with 1.18% expectation. 1.18 rate cuts expected for the year. We ended with 1.3738 rate cuts expected for the year. So we actually increased the level of rate cuts we expect for this year. We saw gold move up about 1.28%. We saw oil drop 3%. We saw 10-year treasury yields drop 6.2 basis points. And we saw all indices, the Russell, the Nas, the S&P, and the Dow, all up 1 to 2% after this meeting, when beforehand a lot of them were down as much as 0.5%, like the NASDAQ. So this was clearly a very optimistic meeting. Now, going through our bingo card just to make sure we've got all of our bases covered here. This was our bingo card. We got bingo across the board. We got the purple tie, maintain the 2% target, weakening in jobs could lead to a sooner cut, have not gained greater confidence yet, and he did address that at least longer-term inflation expectations are well anchored. He got very angry about somebody implying that politics won't affect us. In fact, I tweeted 911, I'd like to report a murder for how aggressively he responded. He says we still have a goal of cutting rates. He didn't say that he still has a goal of cutting rates this year. That is something that he said previously, so we did not get that. We got the split in immigration, jobs data. We got split on GDP. Jay Powell was on time. We did end the meeting more dovish than where we started. We didn't get too much detail on why they went for that extra $5 billion, so we didn't get that. Didn't get a repeat of question. We did get a Nick T sitting next to the New York Times Blondie. Somebody in the chat's like, she's a valedictorian. I went to high school with her. I'm like, dang. But anyway, stagflation, and then he ended up, I wrote, stagflation or describe stagflation. Literally did. The lagged effect of real estate or the second half of the year should be lower inflation. We got all that, got data dependent, and basically we believe we're at peak. And he didn't say specifically that word, but he must have made that clear 17 different times. It was very clear. He's very opposed to raising rates. He's sending an extremely clear signal here that, yes, data dependent, it's going to take more time. Optimistic that the second half of the year's inflation is going to come down lower. So what does this now put pressure on? Well, this now puts pressure on May 15th. Now, what is May 15th? Could May 15th be an opportunity for you to get life insurance in as little as 5 minutes? Link down below, metkevin.com/life. Could it be your chance to sign up for StreamYard, which is how I multi-stream, metkevin.com/StreamYard. Check them out, both paid partners. Could it be the expiring coupon code or the deadline to invest in househack? No, it's the next CPI report. See, the next CPI report just got a lot of pressure because Jerome Powell is basically like, look, the economy's fine. Inflation's going to come down. Things are good. Yes, it hasn't come down as fast as we'd like, but we think it's coming. He got rid of so many bearish concerns. Again, the wage price spiral, the stagflation, the real estate lag. He got rid of a lot of concerns. The hiking. These are huge removals of pain from the economy. All of that was really removed. And what he did is he put the onus on, let's just see what happens in the second half of the year and get these inflation reports. Next April inflation report is obviously May 15th. I don't actually think we have reports for that yet. We do think that wage growth could continue to push up because of things like what are happening in California, where you're raising minimum wages as aggressively, or the aggressiveness that you're seeing in wage gains from unions. But quite frankly, there was nothing extremely bearish in this. In fact, there wasn't really anything even slightly bearish. I mean, the fact that we're not going to get rate cuts in the first half of this year, that is not a surprise. It's not a surprise we're probably waiting until September to December. And the fact that we didn't get punched in the face here, we didn't get JPAB, is quite frankly neutral to, in my opinion, very dovish, which is bullish for risk assets. That's obviously, of course, why we've seen Bitcoin move up during the meeting. But I'll tell you, there's something about the lines, folks. There's something about the lines. These lines are magnetic. And so you have a lot of speculation on that dovishness going in during the meeting. Ran from about 57.5 all the way to about 59.4. But look at that drop right back down to the line. And so if you want to study those lines, make sure you're part of the Stocks and Psych course. While I was live, somebody joined the course. We're going to change the pricing in a few hours. There were just too many emails. What is it? Yeah, somebody joined the course, and the name they signed up with is DJT. Like, oh man, they must be in a DJT stock. That's shout out to them, whoever they are. So there you go. That is a full summary of what's going on with JPOW. I have to say, this is probably the best version of JPOW you could get. Purple tie, on time, very straightforward, aggressively passionate about how strong the economy is. Now, could they be wrong? Yes. But the fact that we don't have to so much worry about wage gains, the fact that he unwound that, and he addressed our concern about inflation expectations, I see that as reasonable, bullish, and thank you. So shout out to JPOW. He had a very good meeting here. So good job.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than househack, nor am I presently acting as a market maker. Make sure if you're considering investing in househack to always read the PPM at househack.com.